Hey guys, Alessio, hope you're well. So what a dramatic collapse and drop in the major stock markets. By the way, this was a drop that we anticipated, we expected was going to happen. Because if you recall, about a month ago, on the 8th of March, we published a video, we warned about a bigger drop to come in the major stock markets, which by the way, has happened. We've seen the S&P now drop from its highs. So from its highs, the S&P has now dropped about 17%. Okay, and by the way, we've seen also a dramatic drop on the Dow. On the Dow, we've seen a dramatic collapse also. So what does this mean? Does this mean that the stock market is now in a bear market? Could it be that by breaking some important structural support levels, for example, by breaking that important trendline support, which we talked about back in March, and also by breaking these important structural support levels, does this mean that the stock market is now in a bear market? Or is it that the stock market is dropping so fast and so deeply that this could be a potential capitulation sign, similar to what happened in the year 2020. So which one is it? Are we in a bear market, or are we getting close to a bear market, or are we getting close to capitulation before a major bottom occurs? Also, what does this data tell us about the markets now that it's fallen below the 50 level? This could be quite important. So we're going to discuss the crash in the stock markets in much more detail in this video. Join me. Alright guys, welcome back. Now before we dig into the chart, the stock markets here, in fact I'm going to take a look at this particular chart of the S&P here, and also the Dow, and also this particular data you're seeing here, which are all very important. I want to first of all just mention that I am now back in the UK. I was for a few weeks in Iran, so I went to Tehran to celebrate the Persian New Year with my good friends there, and guys, let me just say it was an amazing time. If you've not been to Tehran or Iran, let me just say it's a fantastic place and great people. Again, I know that the news and the media always want to talk about negative and terrible stuff about Iran. But let me just say this, a lot of the stuff you hear, as I'm sure you know, a lot of the stuff you hear in the news media about Iran are lies, propaganda, and garbage, which is why I personally like to go and visit there myself. Again, I'm not suggesting that you should go and visit Iran right now. Again, when it's appropriate, I highly suggest that if you want to learn and experience the real Iran or Persia for yourself, then the best way to learn about the country is actually to experience it for yourself. So that's why I just ignore a lot of the lies in the news media. And by the way, one of my favorite places that I went to was the Shah's Palace, the King's Palace, which is in central Tehran. Beautiful architecture and a lot of history within that building. So an amazing time in Iran, and I'm now back in London in the UK as I'm making this video. Let's dig into the charts now. So I'm sure you're probably wondering, well, this particular collapse that we've seen now in the stock market, surely, you're probably thinking, surely is a sign that we're now in a bear market, that this could be a sign we could drop even further, perhaps in the next several months, into significantly lower levels. But some of you are probably thinking, well, the way that it's dropping at the moment is so severe and so deep that actually we could be capitulating or maybe forming a bottom soon. So I want to discuss this in a bit more detail in this video. And as I mentioned, I also want to show you the significance of this particular data in a few minutes as well. First of all, let me just mention this is quite important. The first thing I want to mention is that many of you who are watching this video were prepared. You knew that this drop was going to come even before it occurred. Why? Let me just bring this back a bit so you can actually see it. Back on the 8th of March, about a month ago, as you recall, right there, before this major dramatic collapse occurred, right about there I put out a video with my good friend Manuel Blay of TheDowTheory.com, and we warned of a bigger drop to come, likely in the stock market, about a further 11% drop in the stock market based on what's called a Dow theory bearish signal or a Dow theory sell signal. So essentially, this was when I put out the video, okay, and this was our warning at the time about a month ago. Let's have a very quick watch of what we said at the time, the warning we gave. We'll come back. What is this warning signal? What does it mean?
Well, we got on March 3rd, Dow theory sell signal.
Dow theory sell signal. Okay.
Yes.
Sometimes referred to as the Dow theory bearish signal.
And you can see that the average decline after a Dow theory sell signal is a further 11.22%. So it means that there is still significant, on average, downward price action. So when we had a sell, there is still lots of room for the stock market to fall. Furthermore, more important, the probability of a bear market following a Dow theory sell is 60%. In other words, when you get a sell signal, 60% of the time, it will be followed by a real bear market, the real thing. So this is really a big warning sign.
All right, guys, thanks for watching that. So as you heard, Manuel Blay correctly said that after a Dow theory bearish signal occurred, which by the way, as we see, it broke key trendline support and also structural support. So both of these and the Dow theory bearish signal were essentially warning us of a much bigger drop. And as Manuel Blay said, the high probability is that there could be a further 11% drop in the stock market after a Dow theory bearish signal. And if you actually measure it at the time of the Dow theory bearish signal, which occurred here on the 4th of March, and then you draw it down, okay, if we just have a look down here, yeah, the market has indeed, the S&P has indeed dropped down, yeah, there we go, by at least a further 11%. Yeah, there we go. So to the lows that we made recently last week, that is at least over 11%. By the way, I gave the same warning in my members video on the 9th of March. Here's a clip. Because after a Dow theory bearish signal, the odds increase for a potential minus 16% drop and even an 11% drop on the S&P. That would indeed take it down likely into this range. So a minus 11% drop on the S&P could mean that we actually could potentially drop down into these lower levels. I would say anywhere from between 5,200 to potentially 5,160 to potentially 5,130. All right, guys, as you heard, both Manuel Blay and I were warning of a potential bigger drop to come in the major stock markets, taking us down to the lows that we actually dropped down to. As you can see right down here, we actually broke below 5,400, that support low, and we broke down below the August lows. A tremendous heavy drop. And as we also mentioned back in March, the probability of a bear market increases by 60%. Okay, as Manuel Blay also mentioned. But let me just say this, just because the probability of a bear market increases does not mean we are in a bear market. Manuel made this very clear about a month ago. The two things are not the same. The probability of a bear market is not the same thing as being in a bear market. Okay, my personal view is that if the S&P continues to further decline, if we see a continuation of this decline or drop in the stock market in the next few days or the next week or so, and if the S&P was to take out, let's say, this red level, see this red line on my chart right here, 49.53, it's a very important support level. That's the spring low of last year. If we fall below 5,000 on the S&P and close on the candle chart below 49.53, and also if the Dow confirms this by closing below its supporting level, also the spring lows of last year, that's at 37,611. So if the Dow also closes below this level, 37,611, if both levels get broken and we close below these support levels, that would confirm a bear market on the S&P. I should mention, this has not happened as yet as we're making this video, but it's a possibility we have to consider. So in other words, if the S&P were to drop below this important key support level at 49.53 and the Dow confirms that as well, then that would likely mean we're in a bear market. And that would mean the stock market here has topped. Okay, I know some people are saying, I'm sure some people are saying in the comments, well, by that time it's too late. By the time the market has fallen below into a bear market, below this level, then it's already too late. The market has fallen by over 16%, by nearly 20%. Guys, that is why in the video a month ago on the 8th of March, that is why we made that video and that warning that whenever there is a Dow theory bearish signal, the odds, the probability of a bear market increases by 60%. So we were warning, okay? So we already knew at the time, over a month ago, when the S&P was much higher at near 5,800, at the time we had advanced warning that we could be falling into a bear market. And we mentioned that warning at the beginning of March. Many analysts out there completely missed that. I should say, guys, that there is actually one thing that could change my view or change my opinion about a bear market, even if the stock market was to drop below these levels. So there is one important thing that could completely change things if the stock market, even if the stock market was to drop below these support levels, and that is capitulation. That's what I want to talk about now. So let me first of all mention this. Let me go and show you what's going on this chart you're seeing here. So this is a survey of money managers' sentiments. So as I'm sure you know, money managers are no different than the dumb money. Now take a look at this. This was a chart that I showed you when I was in Iran on the 17th of March. So if you remember my video back from the 17th of March, I showed this chart and I said, look, this particular data, the sentiment of money managers is not yet low. It's not low enough to show fear. Here's a very quick clip, we'll come back. So one way to interpret this chart is perhaps to say that maybe the market has to drop further before the sentiment reading among money managers becomes to an extreme low. All right, guys, as you heard, so when I was making my video back in Iran on the 17th of March, I said, look, this is not low enough. It's at near 60, 68 here, as you can see here. So I was looking for it to drop down at least below 50%. At the time, it was not below 50%. But look at this. Just recently, the sentiment among money managers, again, also the herd, dumb money, has fallen below 50. Okay, that's a good sign. We're seeing more fear now. Having said that, though, the fear level on the survey of money managers, the sentiment, is not as low as it was back in 2023, back when it fell below 25, as you see here. So in other words, we're not yet at the levels we could be back, for example, in 2023, when there was a major bottom occurred in the stock market. And also the lows we made in 2022, and also the major COVID crash low that occurred in the year 2020. And you can see the sentiment among money managers. I mean, they just gave up and sold. You see that right there? So when the crash occurred in the year 2020, with a major stock market crash, you can see that money managers gave up and sold, and the sentiment fell below 25. So at the moment, as we're making this video, the sentiment among money managers is fearful. It's below 50. It's a good sign, but it's not yet at the low levels or the extreme levels of fear like we experienced several years ago, like, for example, in 2023, in 2022, and also even in the year 2020. So I would personally prefer if the sentiment reading, again, the fear levels, the emotional levels, again, the sentiment is not yet as fearful as we would like it to be, like below 25. We're not there yet. Now, we might not get there. Who knows? It's difficult to tell. But it'll be interesting to see if the sentiment reading among money managers were to fall a bit more deeper, lower to levels of extreme fear and pessimism, where they just give up and essentially get out of the market. And by the way, that would signal potentially capitulation. And again, as far as we can tell here on this chart, we're not there yet. So that's one particular factor I'm watching. By the way, one other thing I want to mention here, I think these gaps that we're forming now on the S&P, you see these massive gaps that are forming on the chart of the S&P right over here near 5,400 and also near here just under 5,600. I think these will get filled. I think on the balance of probabilities, I think it's quite probable, quite likely these gaps over here could get filled in the next several days and weeks. Again, it's not a certainty, it's not a guarantee, but I think there's a higher probability that the next bounce or major rally could go back up and fill these gaps in the next several weeks. The other factor I'm watching is we see a bigger decline. If this decline and this drop, this significant collapse we're seeing right now in the stock market, if this continues with this immense pressure, with such quick speed, again, if we see a bigger drop in both the S&P and the Dow, okay, again, with speed, it could potentially reach a level of capitulation, similar to what happened in the year 2020, in the COVID crash. Okay, you can see there how the market just kept dropping, crashing really hard until finally the money managers gave up and they exited, and then we saw capitulation, and then boom, what happened? The market bounced back and then rallied to new all-time highs. So it could be that is what potentially may happen to the stock market in the next several days and weeks if we get capitulation. Let me just say this, guys. We have not yet reached levels of capitulation. Now, if you want to know what capitulation is, according to Manuel Blay's exact parameters and formula, go ahead and read Manuel Blay's newsletter. I think it's going to be interesting. Go ahead and read that. And also watch my members video on Sunday, I'll go into this in much more detail on Sunday in the members video. So the key question is the market going to fall below these levels, which would trigger a bear market, or whether we're going to see capitulation? Let me just mention one thing which is quite important. Manuel Blay also mentioned recently that if capitulation occurs at the same time or after a bear market signal, we can ignore the bear market signal. In other words, the bear market signal gets canceled and the capitulation signal would win. Okay, so I'm hoping that's not confusing anybody. But all I'm saying is, if we get, let me just write this down here. So if we get capitulation, I'm sorry for my handwriting here. If we get capitulation, okay, in combination with a bear market signal, what that means is we can actually ignore the bear market signal. That gets canceled, okay? And we can just focus on the capitulation sign, which would be bullish. So just remember, capitulation, if we get a capitulation signal which hasn't yet triggered, that would be a bullish sign of a potential bottom. So it's going to be very interesting to see which one of these wins over. Will it be the bear market signal? And as I mentioned, we haven't yet taken out these levels yet on the S&P at 4953 and the levels on the Dow to trigger a bear market signal. That is, by the way, what happened. That's what happened in the year 2020, in case you're interested, because in the year 2020, we had both capitulation and bear market signal, and therefore the capitulation signal won out. And as a result, we ignored the bear market signal. But again, everything depends. At the moment, everything depends on what the stock market does in the next few days or the next week or so. And that's going to be very interesting. I'm going to cover this in much more detail, by the way, in the Sunday members video. So watch the members video on Sunday. And I'm also going to cover the chart of Bitcoin and gold in the same video on Sunday as well. And if you're not a member, you can join that link you see right there. Thank you very much indeed. Bye for now.